Welcome back to Finpod, your daily financial digest. I am Evan, and I am here to help you make sense of the market madness. Today's episode is brought to you by Fintwit.ai, your go-to platform for real-time trading signals and stock recommendations. Let's get right into the action. It was a headline-heavy day, and if you were watching your screen, you saw some massive swings in the tech sector. The biggest story by far is the fallout from Micron. After the bell yesterday, they reported explosive results that absolutely crushed Wall Street estimates, driven by massive AI-related demand for memory chips. This sent the stock soaring nearly 16% today. The ripple effect was real, though. While Micron is shining, Apple took a hit, dropping over 6%. Why? Well, the company announced price hikes across its Mac, iPad, and Vision Pro lines. They are essentially passing on the soaring costs of memory and storage chips, the same ones Micron is making a killing on, directly to the consumer. Investors are now worried that this could lead to demand destruction, basically questioning if customers will keep paying up for Apple gear. Meanwhile, Palantir fell about 5%, continuing a rough trend for the year. There isn't one single piece of news driving the move today. It's more about the broader rotation out of high-multiple software stocks. Investors are nervous about how much companies are spending on AI infrastructure, and Palantir is getting caught in that crossfire. Microsoft also slipped, down about 3.5%. Similar story there. The market is starting to reprice these tech giants, moving away from viewing them as pure cash flow machines, and instead seeing them as heavy infrastructure plays that require massive, continuous capital investment. Taking a look at the broader market, it was a mixed and messy session. The S&P 500 basically finished flat, showing just how much tug-of-war is happening between the AI hype and concerns about spending. The Nasdaq, heavily weighted toward tech, dropped about 0.5%, while the Dow managed to eke out a small gain of about 0.1%. The Russell 2000, which tracks smaller companies, actually rose 0.7%. The overarching theme here is a rotation. Money is flowing out of the expensive software names and into other corners of the market, especially as investors digest the latest inflation data, which came in right about where everyone expected. In the AI economy, the focus is entirely on this tension between the chip makers who are winning and the hyperscalers who are spending. We are seeing a real bifurcation. NVDA, AMD, and Micron are the infrastructure layer, and they are printing money because everyone else needs their tech. But the companies building the AI models and cloud environments, like Microsoft, Google, and Amazon, are under pressure to prove that their massive capital expenditures are actually going to pay off in the long run. It is a classic battle of growth versus margins. Beyond the big tech names, we had a few other movers worth noting. BlackBerry was a standout, jumping 20%. They reported first-quarter results that beat expectations across the board, and for the first time in 9 years, they posted positive operating cash flow. That is a massive milestone for a company that has been trying to pivot into a secure software business for a long time. It seems the market finally likes what it sees. Acuity Brands reported today, and the stock rocketed up nearly 18%. They beat both earnings and revenue expectations, showing solid execution in their lighting and intelligent spaces segments. On the flip side, Darden Restaurants, which owns Olive Garden, saw their stock drift lower. They provided full-year profit guidance that came in below Wall Street estimates, citing higher input costs and consumers who are starting to pull back on dining out. It's a clear sign that the average consumer is feeling the pinch. That is a wrap for today. We had a huge day of earnings, a major shift in tech sentiment, and some interesting movement in smaller companies. If you enjoyed this update, please like, share, and subscribe to the channel. Drop a comment below if there is a specific stock or sector you want me to break down next. And for those looking for a competitive edge, don't forget to visit Fintwit.ai for top-tier stock recommendations. Thanks for listening, and I will see you back here tomorrow.